Right, I'm here. Okay, so okay, I'm currently live on YouTube as well. If you want to join me here, this is a new channel. You could join me here. So that you see the chat I am on. You're just coming in. For those on YouTube, I am on Space in X or Twitter, the defunct Twitter. Go to X, look for token trading research. Can I just also pop the space? Let me share the space on the YouTube. You're just coming in. This is Dr. So of Token Trading Research. I'm trying to get the YouTube up so that we could we could be seeing the charts on YouTube. Okay, so we expect the CPI in about 2 hours 20 minutes time. This is the CPI for today. So let's see what currently the forecast is 0.3. What is the implication of that? This is Forest Factory. You could get market information from here. What activity in the market that will be happening, or what policy announcement have been happening on a particular day. So if the actual result or the figures that will be presented today, if it's greater than the forecast, it is good for currency. You might see a bit of activity later. What normally happens in crypto, it is a double-edged sword. You find that this is the time the market maker also make money. They will move the price up and they will drop it. It doesn't just go either way. It's either there's a hype of activities, it looks like it's going to pump forever, then all of a sudden it reverts back. Okay, so this is what happens when there is this meeting. It's not just a unidirection. So the crypto asset trading is quite unconventional. It is different from whatever trading norm you probably have in the conventional market. There are a lot of controls within the crypto space that are not even handled by the crypto ecosystem. These are policies that may be implemented by the Security and Exchange Commission of the US whenever there's a policy that has just come out there that affects the price movement of crypto. Also, unpredictability of the actors in the crypto space. There are bad actors. One thing could be brewing somewhere, then you find that the price movement kind of go down, or the asset tank, or if you want to use something that you're conversant with, it becomes bearish. Right, so it is going to be worse because a lot of people have come into the space, seeing the quick returns, but they lose their money. And as there are more what we call adoption, which a lot of people hope for, thinking that they'll make more money, you only fool people once. You observe that will even be detriment to the crypto space, because unless it is cleaned up by making sure that good actors are there, because a lot of people still have the old mentality that there are people with decency that are going to hold the fort. There isn't. What is basically happening is it is a typical demonstration of what we call zero-sum game. It is a zero-sum game in which your loss is somebody else's gain, and somebody else's gain is your loss. So I'm sad, that is the reality. You find that money is not going to come in through the magic leprechaun or Father Christmas out there. There's no free lunch. So for the market to be made, there has to be enticement for people to get into the market by pumping of the assets. The moment it goes up, you find a lot of people kind of get into the market, only for it to be reversed and they get liquidated, or they get scared. If they're on spot, they sell their assets and lose money, someone else buys it, then it goes up again. So imagine a lot of people goes into the crypto space and discover this is just what is happening. They've all burned. So that means majority of people now have a bad impression about crypto. Whoever that tells you that he has a genuine interest in the field is a lie. Only few applications are actually there that are solving problems. But a lot of people going into the space is to make money. Some have been confessing recently. The intention is to make as much money as possible. In doing so, they play the game of making money based on zero-sum game. Yes, so whenever there's a loss, somebody won. Take an example of the DEX, decentralized exchanges. Few people heard of stories of assets moving up in thousands percentage. And what is basically happening there, you have the DEX platforms that will spike it up, and before you even get into it, those thousands of percentage has already been moved. If there's a lot of network effect, you might be able to have a move up from then on. But if there is no much network effect, it tanked. You lose your money. Some people, if you are doing a DEX trading or so, you probably have a scenario, you put 10 souls in, you are left with less than 1 soul, because the assets you've just invested in have basically gone to zero, or the developer have robbed the sheeple, I would say, who trusted the product or the asset. So this is what is basically going on. Now, there is money to be made, but you have to be aware that your gain is someone else's loss, and someone else's loss is your gain. So if you have that in mind, you begin to be fair to yourself and to the people in the space of being scammers, because you are able to see the scam as, to the face value and be able to evade being scammed. Knowledge is important, and this is why I'm here, and this is what we do in crypto trading research or token trading research. On that note, this is Dr. So of Token Trading Research, and this stream is also going on in YouTube and Space. If you want to join me on stage, come to Space or the X Space or Twitter Space. Look for Token Trading Research and you see my space. Do follow me so that when I'm online, you are notified. On that note, let's see what is happening in the market today. There has been a pump on BTC this morning. This is what I'm currently trading. I normally trade on high leverage and low margin. Okay, so I can afford to lose $20. So that is what I put on that trade. There is no stop loss because the liquidation point is just 400 away. And with that, even with a stop loss, I'll probably just put the liquidation point very close. That doesn't give it a time to breathe. You need your trade to have breathing space. So that is what I have just left the 20 on the table. It is a gamble. A crypto, if you are doing derivatives trading, it is a gamble. Now you want to manage your risk. Though I have some other money there, but I'm not putting the whole house down because I know this could go against me and I could lose that $20. There seems to be activity with volume, although the volume is going down. As we can see, the volume is actually going down at the moment. Hopefully that there is a pump, then I'm able to realize some profits there and exit the market. Because what I do is I scalp. When you scalp, it is quick in, quick out. So on that note, let me check if there is someone who wants to come on stage, and if you have something to say, tell me about your markets, tell me what you are trading. These are information that are useful to the audience. Well, on a day like this, when we expect some market news, you do have a scenario where there's a bit of trap. You rush into a trade when you see assets moving up, only for it to turn around or turn against you, then you lose the trade. And during this announcement later, especially the FOMC members speak, you do observe some movement. These are the times to look at today. We have some of the information coming up around 1:30. It actually started about now. Yeah, so in the next 9 minutes there will be manufacturing sales index. That is in Canada. In US, you have CPI. Core CPI information could be relevant. That could move the assets as well. Then later, you have the FOMC member. Boomer speaks. These are events or meetings that move the assets. Okay, so there could be activity later. Before them, there will be activity as well, as I've explained. You have the moving up of assets, just preparing it for a dump. Now, I am not a fan of indicators, especially in crypto. Okay, I see the chart as it provides me information to the direction of price. That is what the chart does for me, and it also tells me where the market maker has been. So what you observe, you could have the best indicators out there on the screen. You find that if those unexpected news, unpredictable news that fills the space comes in, your technical analysis, system analysis knowledge is obliterated in a trickle of an eye. It's just wipe out. So you see the chart all over the place. It goes across your Fibonacci lines, your supports. You just destroy the chart and take your money, take your liquidation points. This is what goes on in the space. With that in mind, I try to do quick in, quick out. If I make a profit, take it and quickly run. And also, it's also a bad idea to put your house down in derivatives. You could be greedy, but if you ask an experienced trader who has lost a lot of money in trading derivatives of the crypto assets or perpetuals, he or she is going to tell you he's going to be very, very careful, very prudent with his trade and the amount of money you put in. If you are going to be somebody who trades perpetuals on leverage, try starting with $50. If you do not lose the money, if you do not blow your account up, grow that $50 to whatever you want as your size of account. That is what I will say, and that is what I have decided to do after learning from a very big mistake. You could come into this market with millions, your pocket is never deep enough. You will lose all of them. You can come in with $1 billion, you will lose all. So, having that in mind, you can train yourself with a little capital investment. What leverage is able to have access to big money to trade. I have, at the beginning, when I didn't know this market, I used to hold my trades. I get caught out in leverage, and I begin to, add the margin, size the margin. Even sometimes it comes to 1x. I have been liquidated on 1x. Because if the market really goes bad, they will go for your 1x. In no time, you get liquidated. So no amount of leverage you use. Could be low leverage. You think that keep you on the safer side. You usually find that they hunt those liquidation points and take them out. And by the time you start to size margin up, in little or no time, you begin to observe that your margin becomes bloated and you are now caught. Remember, when you trade derivatives, if the market turns against you, you lose every money. You lose every margin. So you basically are left with zero. And this is where, if you are conversant with the assets you want to trade, this is where DEX becomes useful. That is decentralized exchanges. Powered by Web3. You connect your wallet. It could be MetaMask, Phantom, Coinbase. Just name it, whatever wallet, Ledger, whatever wallet you use, Treasure. Then you are able to connect to your wallet directly, and you're also able to trade your assets on spot. Okay, so trading on spot has advantage, because if the worst happens, you still have your coins. It might take some time for it to come back. It definitely will come back. So it definitely will rally up again. You are able to then exit with profits without losing anything. The only thing you may have lost is the time while you were waiting for this asset to turn around. Okay, so this is information you really need to be aware of. Now, if you take a chart, okay, so what do you want to trade? I normally trade on 1 minute, but before even going into that 1 minute, I try to see where the 50 EMA, the indicators I use are the moving averages. I use the exponential moving average. The beauty of that, it actually calculates the recent weight on that asset as against other moving averages, which actually look at the weight up to the historical existence of that asset. But with exponential moving average, it picks the recent ones. So I'm interested in 50 EMA. That is quite useful, because what happens is most of these market makers, it kind of serve as an indication point where they revert their price to. Remember, the whole idea of market making is able to provide a lot of liquidity, and to maintain that liquidity with profitability, you need to be able to pay some and also take some. Okay, so as I've said earlier, zero-sum game. Okay, so when you look at chart, I start with an hour. I look at the overall picture. How far away are we from the 50 EMA? And my 50 EMA is that one there. That color that looks turquoise or whatever. So that is my 50 EMA. Then I can see that this asset is not that far away from there, and there are some crossing going on there. And with time, you find that crossing actually that is where the market maker now play some game, because they know that people will be taking action whenever they see crossing that the price is going to go up. What they often do is they will pull the price down so that for liquidity grab and bring the price up again. This is why if you have a deep pocket, you are doing leverage trading and you have the discipline, you only put little margin if you are faced with that, when they run the price down, you buy it as cheap as possible by looking at the charts. If I were looking at this asset, which is BTC, I know that if it pulls back violently, it is going to go to around 60,000, around 60,900 or so. So I know it's going to go there. And if I confirm that there is a reverse that is going to happen, if there is a violent pullback, then I will put a trade. So if I were liquidated, I'll be able to recoup my money while it is going back. So this is how having some money in your account could be useful. If you are someone who kind of do something like a punter, if you have $10, you just put it there, and when you get liquidated, you don't have other money to buy the low price so that you can get the money you've been liquidated back. It becomes difficult to really make any headway or progress, and a lot of people are in this dilemma. They get messed up, they run away, they come back again, they get messed up. So I've just made about $7 there. If I scalp, I do take my money away. Okay, I do take my money away. I'm going to take that. I'm just taking my gain, and there's still some momentum coming in. We could see there are pullback there. I'm going to right, so let's do 2,000, and 2,000 is a $20 margin. I've taken $7 gain some few minutes back, and it basically have about $13 if the worst happens. If it goes up now, I have made another gain. So these are ways to trade. It is a way to actually make money, but you're not desperate, because if you are desperate in this business, you lose it all. It doesn't work with desperation, or you probably think you've lost, you're going to make money just in one go. It doesn't happen like that. So we could see there's a substantial pullback that's happening there, but it's not worrying at yet. If it starts to go around $8, then I begin to worry, or I begin to add margin. As much as possible, I try not to add margin because it's a rabbit hole. Okay. Right. So what I'm going to do now, I'm going to I think I'll call it a day now. I'll come back later when the US market is open. On that note, if this is the first time of coming to this channel, do subscribe, press the notification button so that you know when I'm online. And if you are in YouTube, you could come on stage with ease if you also connect to Twitter and come to my space on X or Twitter. Hope to see you some other time. Please do follow me in Twitter or in X, as well as subscribe in YouTube and press the notification buttons in both of them. On that note, thanks for coming. I'll catch up some other time.